All three major U.S. stock indexes ended more than 1% higher on Wednesday as investors sought bargains after the previous session sell-off and increased bets for a September rate cut in the wake of Friday's weaker-than-expected jobs data. Tesla shares rose after the electric vehicle maker granted CEO Elon Musk 96 million shares worth about $29 billion. Odds for a September rate cut now stand at about 84%, according to CME FedWatch.
Tariffs are definitely looming, and they haven't really hit the markets or the economy yet. Consumer pricing hasn't really been impacted as of yet. So I do think that that is one dynamic that we can expect to impact as we move forward this year. Usually those impacts take some time to feed through the market. We had some delays because of what President Trump had done with regard to postponing some of the impacts of the tariffs. But now as we're kind of getting some form and function to what the actual tariffs look like, 15% seems to be a little bit of a baseline, especially once Japan was locked up with that. We're getting EU numbers coming in. We're still waiting on China, who is a large exporter to the U.S. So I do expect some of those figures to start to hit as we move a little bit further into the fall here. And as a result, those prices could rise, and we could see that impacting the economy and the profitability and mostly the margins of some of the companies, which thus far have been able to absorb any impact that they've had, which have been minimal.
Market participants see at least 2 quarter-point cuts by the end of this year. Friday's bleak July jobs data also accompanies steep downward revisions for May and June. The S&P 500 and Nasdaq had hit a string of record highs recently.